Hey everybody, it's Todd Ault. Welcome to a special edition, the very first premiere episode ever about It's Bitcoin Weekly. And this show is everything crypto. We're going to have special guests around crypto, Bitcoin. Everyone knows when I say crypto, I kind of really mean Bitcoin. And today, oh boy, do we have a guest that does not need an introduction? It's Greg Foss, everybody. He's going to be here today. He's a strategist, a 30-year financial professional focusing on high-yield credit. He is an executive director at Volatility Power. He's in the Bitcoin ecosystem. I spent some time with him on a podcast, which, by the way, is our most popular podcast we've ever had, unpromoted. I think the first day, like 5,000 people tuned in to watch this guy. And when I interviewed him the first time, I was like, oh my God, I left there thinking to myself, I called my wife, and I went home that night and said to her, I didn't call her, I don't know what the hell I'm talking about. I went home that night and said to her, I'm going to put Bitcoin in for all of our kids. I'm so into this. I'm such a believer. And so I not only drink Bitcoin, I got Bitcoin coins. They're just like for fun, but I'm so all in. We ran, We're in the racing team's involved in Bitcoin now because with Ed Carpenter. We're mining like crazy. As everyone knows, and just for disclaimer purposes, let's talk about a few things. First of all, it's important to remember Greg Foss is going to be at our show. He's going to be at the Risk on Business Conference at the Paris Hotel, May 12th to the 15th. I think Greg is speaking on Saturday. Obviously, he's a panelist. He's a Bitcoin expert. And ladies and gentlemen, without further ado, Greg Foss is on the show.
Wow. What a great intro. Thanks for having me for the second time, Todd. I look forward to lighting a fire under your audience. And thanks for having me as the first guest, if I understood that correctly.
You are the first guest ever on the world premiere of Bitcoin Weekly. And I say weekly because we do 3 other shows a week with Risk On Traditional. And so we're going to try to do this. I can't help, by the way, but say that I'm looking at Netflix falling right now. First time global reduction and stuff. I can't help but say the market is going to be volatile. But you got Bitcoin at 41,279. And Greg, what I was hoping to achieve, but I got to give a disclaimer first before you answer any questions. For full disclosure, I'm the executive chairman and founder of BitNile, and BitNile Inc., a subsidiary, has ordered 20,600 miners from Bitmain. We have a facility in Michigan. We are presently mining, I think we've presently taken delivery on 4,700 miners with another 2,300 coming this month. And by the end of September, we expect to have all 20,600 or so installed, plus or minus, subject to delivery schedules and stuff like that, supply chain, copper stuff. But we are hoping to be in the top 10 of all miners in the United States and North America. There's some bigger players than us, obviously. And we're thrilled to be part of it. We own Ernie. So there's full disclosure, everybody. I am completely biased to Bitcoin. We mine it. And with that, Greg, I was hoping you could give us sort of, for the first episode, I just want to hear your take on where Bitcoin is today. There's a lot happening. There's a lot of misinformation. And I think that when I read your stuff, you should have the laser beams on your eyeballs because you are laser focused. You're very focused on what's happening. What do you think about the status of Bitcoin today? What's happening?
Awesome. Well, congrats on BitNile. I want to also, full disclosure, Volatility Power has 400 megawatts of behind the meter, off the grid power in Canada. We're a large customer of Bitmain as well, slightly larger than you are in terms of the miners we're going to take delivery on. And an exciting one I want to talk about is our hydro mining option or opportunity, where we are going to be taking Lake Ontario water at 4 degrees Celsius and being able to cool our miners using a license to pump water out of Lake Ontario and run it through a heat exchanger, so it doesn't include any of the lake water, but cools the miners, making them that much more efficient. So good things happening in Canada as well. Very quickly though, where do I see Bitcoin? We are still extremely early in the best asymmetric investment opportunity I have ever seen in 30 years plus of managing risk. Todd, I don't have laser eyes because they say laser eyes until 100,000. 100,000 is still a rounding error. Okay. Bitcoin's going to $2 million plus US, and that's in today's dollars. Okay. Now, I always approach everything on a probability basis, so I can't give you 100% certainty that I'm right, but I will tell you I'm far more confident than the market is that I am on the right side of the trade. And I'll get into the mathematics later, but let me just assure you that in 30 plus years, this is an opportunity you cannot let pass. This is an opportunity to build generational wealth for your family, for your children and their children, because our government is selfishly pulling forward gains that should accrue to our children for the benefit of selfish boomers like myself that can't deal with the reality of dealing with, paying our own debts. So Bitcoin is the solution to the Fiat Ponzi. Many listeners may have heard that they're concerned that Bitcoin is a Ponzi. No. Bitcoin is the real deal. It is monetary energy, and the Ponzi is fiat or paper money. Protect yourself and your family accordingly.
Greg, I will tell you, I got pretty excited the first time I met you, and I just decided to read everything I've ever could find on you. And
okay,
in my investment career of 33 years, I have market time things. And I made these, what I consider to be, Warren Buffett talks about errors of omission and errors of omission, right? Where you don't really know the error made. He talked about that he owned like 5% of Disney, and Disney was trading for $80 million. And he ended up selling it for like a $10 million profit.
Right.
And he said that people don't realize that it was worth billions of dollars later. And so, and this is a selfish plug, but we have a product called HEREBY that we're an investor and we own 19.9%. And they have an auto invest thing going on, right? Where it just automatically buys Bitcoin for me every day. And I swear to you, after I met you and the product went live, I signed up every day to buy Bitcoin. I don't even look at it. It's every day. Every day I get a notice. I'm buying it every single day. I don't quite understand like how it's all gonna move around to have a lot of your net worth in Bitcoin. And I know that you're not a financial advisor and you're not providing financial advice, but for yourself, how do you navigate if you're an average person? Let's say you're making $75,000 a year, maybe you have $20,000 saved and you have a 401k. Do you have any kind of thought as to what someone should be holding in Bitcoin? What would you say to the audience to say, hey, if you're thinking about Bitcoin, here's how I'd get involved? Because obviously at 41,000, people are saying, well, I remember when I was mining Bitcoin at $5, right? So,
okay.
and I look at it and go, well, you convinced me. You didn't even have to convince me. I was already probably ready to go. But when you talked about the amount of gold in the universe and how much it's being diluted every year, yes, which I think you said was like 4 or 5% a year was getting dilution.
It
right?
could be 2%. 2% is generally the number. But if the price of gold were to double overnight from $2,000 an ounce US to, let's say, 4,000, I can guarantee you that the production of gold would increase markedly over a 2% growth rate annually, right? They would find deposits. So
and this is a very important point, though, is that when I listened to your point about how you got to 2 million a coin,
yes,
it was relative to the world's gold supply, but knowing
total assets, total financial global assets, correct?
Right. So it isn't, when people understand that argument you made of total assets in terms of investment universe, and then I went back and looked at some of the statistics about how many millionaires there are in the world versus how many own Bitcoin. There's not even one Bitcoin for every millionaire. I mean, it's the idea that this asset class is going to get bigger. How do people approach it? I'm a person, let's say I'm making 75 grand. What do I do?
Right. So everybody's in the same boat, Todd, in that this is my sort of crutch statement, if you will. If you own 0 Bitcoin, regardless on a percentage basis, regardless of the size of your net worth, if you own 0% Bitcoin in your portfolio, you are actually taking more risk than if you have a proper portfolio allocation. Now, that definition of proper portfolio allocation starts with something greater than zero. So a famous line, a tagline is get off zero. And my first advice to anyone who owns zero Bitcoin as a percent of their portfolio, move yourself up to the 5% level. And do that over time by dollar cost averaging or using those apps that you mentioned. Because it's important to, in a volatile price asset like Bitcoin, you want to be buying when the price is low if the price falls, and you want to be buying if the price goes up. You do it disciplined nature and get to 5%. And here's the kicker. When I get people who have never owned Bitcoin before up to a 5% level, it's like they forget the other 95% that they own. And they're singularly focused on Bitcoin. And I say to them, hey, do you check the price of your house every day, for example? And most people should say no. And treat Bitcoin the same way. Both are hard assets. Both are assets that will appreciate in value as the fiat currency debasement occurs. So I hate to break it to people, but their house hasn't really gone up in value. What it has gone up is measured against a unit of account called a US dollar that depreciates over time because the government prints so many of them. It takes more of those same dollars or more of those dollars to buy your same house. It appears that you've made money on your house. In reality, what's happened is the unit of account is debased and it takes more of those dollars. But back to my original focus. Get 5% of your net worth in Bitcoin, and then see how you can stomach the volatility. And most people will realize if 5 out of $100 is invested in Bitcoin, I can worry about the other $95 and what it's doing. You got to train your mind. You got to do something called lowering your time preference, because ultimately, I do believe it goes so much higher that don't overthink the trade like Mr. Buffett did in the case of Disney. You feel like a star, you've made a small profit, but you leave so much money on the table. And that isn't just money. It really is an insurance product. Todd, this is the important thing to remember. Bitcoin will solve so many problems that fiat currency cannot possibly solve, and in fact makes worse, including things like the privileged versus the less privileged people. When you're in an inflationary environment or a debasing of the currency, privileged people have assets that will appreciate in value. They have houses, they have stocks, they have assets that will maintain their purchasing power. Many people, though, in the lower privileged areas, they might have, as you mentioned, $20,000 in savings, and they generally keep it in a bank account. The bank account is getting debased along with the currency. So they're the ones that are getting hurt the most. So in an environment where you print money to solve problems, it actually increases the problems in our society. And Bitcoin solves this because, as you've mentioned, it's scarce. There's only 21 million Bitcoins defended by math and code for the whole world to share forever and ever. And just to lay out how I get to my price target of Bitcoin, it's very simple. I look at the total addressable market of financial assets in the world, which is $900 trillion US. And that includes all real estate, it includes all debt, it includes all equities, it includes gold, which is 10 trillion. So 1/90th of the total wealth in the world is in gold. It includes currencies, it includes commodities, and it includes fine art and other stores of value. $900 trillion. Very simply, I think it's very logical that Bitcoin, when it becomes the global reserve asset, replacing US Treasury bonds as the global reserve asset, it captures 5% market share. And 5% of 900 trillion is 45 trillion. 45 trillion divided by 21 million is over $2 million US per Bitcoin in today's dollars, because we are measuring that pie or that total addressable market in today's dollars. So it's trading for $40,000, Todd. And I think it should be trading for 2 million or higher. Let's do some quick probability analysis. The market is telling me there's only a 2% chance I'm right. 40,000 divided by 2 million is 1 in 50 or 2%. I told you I'm not 100% certain it's going to 2 million or higher, but I'm way higher than 2% certain. I'm probably 40 or 50% or even higher than that. And therefore, Bitcoin should be trading at a lot higher price than 40,000 US right now. And I'll put the final nail in, I hope. I got involved in Bitcoin like you, not quite as early, but I got involved in Bitcoin at under $1,000 US per Bitcoin. I can stare you right in the eyes and tell you with all of my heart and all of my experience, Bitcoin is a better purchase today on a risk-adjusted basis at 40,000 US than it was when I bought it at under 1,000. And very simply, why is that? Because of the government's response to COVID and all the printing of money that has happened since I got involved in Bitcoin. It has assured that the debt spiral, the fiat debt spiral, can never be solved. They need to print money forever and ever, which means currency debasement is 100% guaranteed. Very few things in life are 100% guaranteed. Fiat currency debasement is 100% guaranteed. It's only mathematics.
Yeah, I would agree with you on the debasement part. No, there's no question about it. It's only mathematics. And I want to be clear, just because I was involved early doesn't mean I did anything right. So let's be clear. You're much more right on this than I am. I don't know. I don't know what to think about when I look at the idea of putting net worth behind it. I guess people nowadays, like at least the last couple months, have been saying, well, Bitcoin looks like it's tied to the NASDAQ a little bit. But I've actually seen arguments that if you just get off the short term and you look at it, actually has been hedging inflation over like a 5 or 7 year period. So everybody keeps looking at this microcosm, like this like narrow focus.
High time preference, narrow focus, quarter, first quarter, second quarter. So yes, you're right. In a high time preference, which means a short period, Bitcoin has been tied to the NASDAQ. And keep your question, your thought, but I'm going to debunk that theory go ahead.
My concern is when you see a disruptive asset, and I've seen this over time, that people want to judge everything based on some sort of metrics that hasn't happened before. And I can think of Amazon there was a time frame where you see Jeff Bezos talk about the business was doing incredibly well, but the price was like $5 or $6 and all the metrics were up and to the right. And so he didn't need money. He didn't need anything, but the market had got it wrong until it got it right. And a pretty famous investor, big mutual fund guy, has said he's put about half his money in Bitcoin. And I look at this and think to myself, okay, it's sort of happening again, right? Now
Bill Miller, are you talking Bill Miller?
Yeah.
Probably. Yeah, he's a beautiful investor, and I love his style.
So Bill Miller, for example, was the one that led me to Amazon. He's been, I've followed him forever, and it got me thinking that the more popular it gets, the more people analyze what's happening every day, every week.
Correct.
And they don't have this big picture. So I wondered how you explain to people, hey, I guess I just got to stay focused on this idea. You're saying, hey, on every $100, just put $5 away, right?
Yeah.
And if you look at it if you look at it, you're like your house, you're not going to look at it every day.
Correct. And that's what I would advise. It's tough to get people over the hump. You got to education is key. There's no question. Well, I want to address your concern about it's correlated to the NASDAQ. Let's not overestimate the impact of computers and algorithmic trading that takes place on Wall Street. And algorithmic trading is based on a rear view mirror. And sometimes these programs program themselves amongst correlations of assets. You'll get certain people who do believe that Bitcoin is nothing but a high-tech investment. There's Gary Black, quite famous ex-Goldman equity guy that believes that Bitcoin is nothing more than a tech stock. I believe he's totally wrong. Bitcoin, in my opinion, is a credit default swap on a basket of fiat currencies, which is to say when you own insurance on credit, you are actually long volatility. You are long an insurance contract. Now, Wall Street hasn't caught on to this, but I'm confident they will, because Bitcoin is an insurance product. When you own insurance, you own volatility. What happens when markets get in turmoil? Volatility tends to shoot through the roof, doesn't it? If you look at equity vol as that measuring or that metric, Bitcoin has shown, in my opinion, times when the equity markets were puking and their Bitcoin gets a bid. Now, it's a bit of a battle between the computers or the machines at one hedge fund that believes it should trade as a long volatility asset versus other hedge funds that believe it should trade as a short volatility asset, which means a risk off. When the NASDAQ pukes, Bitcoin should puke in lockstep. I promise you, over time, the long volatility thesis will win once people do more research on what Bitcoin is. And that helps when you get the likes of Fidelity Investments, who have come out with a really great research report, in my opinion, on Bitcoin and why every portfolio needs to own some. So if your listeners want to look to a professional asset manager who has an opinion on Bitcoin and the dampening or diversification benefits of having Bitcoin in your portfolio, please look up the Fidelity research piece. And I'll finish this little argument by saying I was lucky enough to be on stage in Miami at the Bitcoin 2022 conference with four billionaires, one of which was Orlando. I'm forgetting his last name right now, but Orlando runs the largest private equity fund in the U.S. Okay, he together with Marcelo Clore and Ricardo Salinas are billionaires from Latin America. All three of those gentlemen are seeing massive. Orlando Bravo are seeing massive. So he runs Thoma Bravo private equity. It's $100 billion private equity fund. He has sovereign wealth funds as clients. He has all state pension funds as clients. He says that all they want to talk about is Bitcoin and an exposure to Bitcoin. When you have that type of insight into what the big money is doing in the world, they haven't even moved the needle yet, okay? When the big money gets involved and they're lining up on the doorstep, much like Fidelity has done their research, there will be a tidal wave of interest in Bitcoin. It will dampen the volatility, but it may shoot the price up so high because people will be selling things like bonds. Bonds are getting decimated. This is the first time in 30 years that bonds have been down as much as they have in the last 3 months. And that's purely because interest rates couldn't go any lower in the US. And now inflation expectations are kicking in. And your bond portfolio, which used to be your insurance policy, is not an insurance policy anymore. It's actually a liability. And assets or money will flow out of that asset class, in my opinion, into the digital asset space with a focus on Bitcoin.
So Brett, Christy, we gotta mark that spot because I have, that was mind blowing. And what was mind blowing about that was I had not thought about it the way he just said it. So if those of you who do not, I've been on Wall Street for 33 years, a credit default swap. What Greg is saying is amazing. He's basically saying if there's a basket of fiat, the credit default swap to that is Bitcoin. That is a thesis that I guess I should have known already. I guess I should have known that.
Can I add, Todd, I've calculated the intrinsic value of Bitcoin using the credit default swap rates on sovereign nations, including the United States, which people are paying insurance against the United States defaulting. And interesting, you would say, why would anyone ever buy insurance on the USA defaulting? And I could say things like, well, they already have. In 1971, it was effectively a default when the US went off the gold standard. But everything being equal, even the United States, which in my opinion is the most solid fiat out there, it will be the last fiat to fail. There are people paying a small insurance premium to insure themselves against default of the United States over a 5-year period. These are open market rates that you can monitor on a daily basis. And using that basket, I've calculated an intrinsic value of Bitcoin using open market rates and live credit default swap pricing on the respective sovereign nations. And it's pretty cool because it just shows you how darn cheap Bitcoin is at $40,000 of insurance, of a premium.
Yeah, and so the idea now is that people accept it as payment, they accept it as digital energy, and so it's effectively become a world standard for store of value, exchange of dollars, exchange of Bitcoin, effectively, exchange of monetary. I mean, it's
energy.
Somewhat mind blowing since it's decentralized. It's totally mind blowing, actually, not somewhat. That it's that if you think of it as a basket, a credit swap to fiat. Yeah, I've never really thought of it that way. That's
It's my background. I always start everything from a credit lens. If people don't understand that credit runs the world and equity, I often say credit is the dog and equity is the tail. And if you don't understand what the dog is doing, your tail is going to get whipped around like a rag doll. And that's what tends to happen with the equity monkeys who do not understand when the credit markets get sick, the equity market gets destroyed. And they try and do things like timing markets, and don't try and time an equity market unless you know what's going on in the credit markets.
Yeah, I've spent a lot of time on Wall Street, and I've always been taught that the credit people know it first. They see and sniff it out before everybody else does. And I've seen that. You saw that in 2007, 2008.
Correct.
I've seen it with a lot of companies. You pay attention to what credit looks like. I remember buying Taj Mahal bonds when that went into default, and Carl Icahn was buying bonds back at 32 cents on the dollar. I've seen it with lots of banks. It's absolutely. I wondered kind of out loud, one of the reasons maybe why it's pulled back since I was in Dubai, and that big pullback from 69,000 was that it just too many people got involved very quickly. You sort of have this meme thing going on with the retail investor and a lot of that helicopter money that was spread all over the place. Do you think that had anything to do with it, or what was your take on the run to 69,000?
Okay, so the run up was, fear, FOMO, right? Fear of missing out. Again, I anything below 100,000 is a rounding error. I'm not smart enough to tell you whether it should trade at 50,000 or 40,000 or 75,000. In fact, I think it should be trading many multiples higher, like $400,000. But that being said, it's not. So that is a very good opportunity to buy what I term as cheap insurance. But one of the instruments that has been introduced to the market that is definitely having an impact is the Bitcoin futures ETF. So the futures trading and the amount of open interest on the futures contract has reached all-time highs, which means there's open unfilled contracts on Bitcoin in both directions that are at extreme levels, which means people have bet using derivatives on the future price of Bitcoin. Now, the greatest thing about Bitcoin is the spot or the cash market is limited to 21 million coins. And if you have that much derivative exposure, there could be a face-ripping rally that will require the shorts to run and cover their short. Some of the run from the past run was definitely a short covering FOMO, but like everything, Wall Street can be bigger. The machines can be bigger than the retail investor, and the machines tamped down the price of Bitcoin because people thought they needed to use Bitcoin as a hedge. The craziest thing is, though, they're selling the thing that they should be using as a hedge. And that's what Bitcoin is. But again, the algos can drive short-term price because they have big money behind them. And who knows what's happened in the last 6 months. All I will tell you is if you are a long-term accumulator of Bitcoin, you're actually happy when the price goes down because you can buy more Bitcoin for the same investment dollar. Over time, just look at Bitcoin in a logarithmic scale. It will smooth everything out for you. It will show you. And again, you can go to bitbo.io, bitbo.io. It's a beautiful graph, and you change the scale to log scale over the life of Bitcoin. And man, oh man, is it a beautiful chart from the lower left to the top right of an increasing asset, as it should, because as you've mentioned, it's gaining adoption and we are still so early. It's incredible to think where we are compared to the amount of money that needs to get exposure to Bitcoin.
Do you care about any of the other cryptocurrencies when you look at them? Do you care about?
Yes, Ethereum? I care. I care because I think, and I need to be careful. I believe Bitcoin is the only digital asset that solves the fiat Ponzi, and that's my biggest concern out there, Todd, is solving the fiat Ponzi. The fiat Ponzi I've been exposed to for 30 years. It's a function of leverage in the banking system. It's a function of crony capitalism on Wall Street, which I lived through in 1999. You did as well with long-term capital management.
I sure did. I sure did.
These are Wall Street bailouts that should not happen, but basically transfers leverage from the financial system onto the balance sheets of the Federal Reserve and the governments. This is what fiat does. It requires regular bailouts. I've lived through 4 of them. I got my start in 1988 with the Latin American debt crisis. Then we went to long-term capital management 10 years later. Then we went to the great financial crisis 10 years after that. And then 10 years after that, we went to COVID. Each crisis has been more severe. It happened in a compressed amount of time. And the response by the government has been orders of magnitude bigger, the amount of money that they've had to print to get us out of these jams. All of it leads to Bitcoin. And therefore, Bitcoin is the only thing that solves the fiat Ponzi. Now, taking it one step more, do I believe in the value of smart contracts and a blockchain like Ethereum? Yes, I believe in the value of a smart contract. No, I don't believe Ethereum is the perfect blockchain to do it, because Ethereum still maintains a level of centralization, centralized control. Bitcoin is totally decentralized. So I'm going to throw this argument out there to you, and I'm going to get hate mail from the ETH heads. That's fine. I think that any token that survives on Ethereum will ultimately gravitate to the Bitcoin layer 3 solution, because they won't get rug pulled by a change of proof of work, for example, to proof of stake and gas fees and all of that stuff. But that's only my view. I'm not telling you not to own Ethereum. I am just telling you that Bitcoin is the only thing that solves the fiat Ponzi, and that's what I am most concerned with.
So we have a licensed lender, Greg, and we've been looking at layer 3. It's funny. It's almost like you were in my office the other day, which you were not. But, the idea of using Ethereum versus can you use layer 3 and use Bitcoin for more smart contracts, insurance contracts, things like that. Can you write? I was just in the Cayman Islands for a week meeting with the insurance lawyers and stuff down there. Can you write layer 3 contracts that are monetized in Bitcoin and paid out in Bitcoin? And the answer I'm being told down in the Caymans is the insurance authorities down there are letting that happen now.
Interesting.
Imagine,
I'm no coder. Yeah, I'm no coder, so I need to be careful that I don't try and pretend I know something I don't know. I know what I know, and I know what I don't know.
Oh, I'm not a coder either.
But here's what I do know. I've met lots of very smart. I've not met lots of very smart coders who are building applications on Bitcoin layer 3 and are so excited by improvements like Taproot and Tor and all these things that are happening to the Bitcoin blockchain.
Sure.
Methodically, though, it happens because it requires an acceptance by the core devs to bring these changes into the Bitcoin blockchain. These don't get instituted by a group of founders like Ethereum founders. So it's methodical. It takes time. Do I want this to be the case? Look, Bitcoin layer 1, the on-chain, already solves all the problems I'm worried about in the fiat system. Layer 2, which is Lightning, and layer 3, which is smart contracts, that's just bonus. That's gravy. That's the stuff that turbocharges your price appreciation. But I'm an on-chain guy. When I saw Bitcoin in action, the blockchain at tradeblock.com, I'm an engineer and I'm like, are you kidding me? This is a living, breathing, beautiful ecosystem and no one controls it. It's decentralized. I'm all in, but I'm all in from a finance perspective, not from a coder's perspective.
Okay, well, Greg's going to be at our conference, and this is a first. I think this is I wanted him to be the first guest. There was a reason for it. I think it's fair to say that Greg just said it's early, and what's the status of Bitcoin today? Where does Bitcoin stand? He's bullish. I'm bullish. 5% of your net worth should be there if you're getting started. Obviously consult your financial advisor. Got to give you all the disclaimers. We're not recommending it, but we're doing it ourselves. If you want to see Greg in person, he's going to be at the Risk On conference, the business conference in May at the Paris Hotel, May 12th, 13th, 14th, 15th. And by the way, if you sign up and you go and you attend, you have to be there in person. I'm going to give you a little token like this. It's going to have $100 worth of Bitcoin for you.
No way.
$100. So 100 comes off your purchase price because you're paying for it, but I'm giving you back $100 in Bitcoin if you go to earnity.com when you're at the show and you sign up. We'll give you a code. You're going to get it even if you're an Earnity member. Greg's going to be there, and I'm going to interview him. It'll be fascinating. We're going to have a more conversation about this. Greg's a real. I mean, I got to tell you, every time I talk to him, I've actually watched the show that I interviewed him on. So I watch a lot of shows over and over again. I listen to private equity things, podcasts, books that were written by Steve Schwartzman. I just consume the information. One of my favorite guys in the world is Kirk Kerkorian. There's a long history here. My family knew him. He built Vegas effectively, built the MGM Grand, the original one, then the second one, and the International Hotel. And he was a gambler and a risk taker. But I've listened to that book, The Gambler, probably 100 times just to get little tidbits. And I get the same thing from Greg. Just think about what he said. We're gonna copy that. We're gonna put that everywhere, which is it is a credit default swap on the world's fiat currency. I know what that means. I know what credit default swaps were during the mortgage crisis of 2007, 2008.
Yeah.
It's almost, to me now, it's impossible for you not to have Bitcoin exposure. We're doing that at Nile. I mean, the reality for me is that this is a long bet for us to mine Bitcoin and to use that in really amazing ways like Layer 3. Anyways, Greg, I look forward to seeing you in May. You're a wonderful first guest. Hope everything's okay up there in Canada. I read a lot about the Canadian government up there, and I guess I'm not going to get into that, but hopefully you're fine up there. It was a little chaotic for a while. Everything okay?
Everything's good. I mean, listen, this is another Bitcoin use case, right? And I don't want this to ever happen to anybody, but I cannot believe it happened in Canada, where the government freezes accounts, bank accounts of people they don't believe follow their ethos. That's a scary time. I know people whose bank accounts were frozen. It's a life-changing experience, and it's just a Bitcoin use case in real life for me. I will share with you at this point, and I'll take questions at the conference, which I'm really looking forward to. I'm 40% of my net worth, and that includes all my real estate. And I shouldn't say all my real estate. It includes real estate. I'm 40% into Bitcoin. And there's times when I feel I don't own enough.
Wow.
Okay. And if you think 5% keeps you up at night, no, 5% should help you sleep at night with all the insanity that's going on in our fiat world. So I look forward to trying to help people make it over that hump. Okay. It's an education process, Todd. I've studied Bitcoin for easily over 1,000 hours. Okay. You don't just wake up and you're not orange pilled just because all of a sudden you hit that aha moment. You might hit the aha moment, but you still got to dig. You still got to manage risk. I will tell you once again, I have never believed so fervently in an investment opportunity as I do in Bitcoin, only because I've seen the circus act for 30 years. And this circus act is becoming more of a circus on a daily basis. You need to protect yourself. So look forward to seeing you in Las Vegas. Thanks for having me as your inaugural guest. Love from Canada. Let's go get them.
There's nothing else to say, everybody. Risk On. We'll see you tomorrow on the show, 1 o'clock on the regular Risk On show with Jason is out there looking for opportunity in Bitcoin. So Jason will probably be calling in Greg as I couldn't have asked for a better first guess.
Thank you so much.
I'm so grateful. Take care, everybody.
See you in a couple of weeks.
We'll see you guys.
See you in a couple of weeks. All right.
Bye-bye.
Thanks again.
Whatever your business is, if you want to scale it, you want to be here, we're going to have lots of other people there that have actually built businesses.
This will make somebody's life about 1,000 times better.
You got a business and you want to expand your business, whether you're in the restaurant business, you're in technology, whatever your business is, if you want to scale it, you want to be here. This is going to be a conference where you can learn something, meet people, and network. Limited slots are available. Head over to ToddAult.com and register today.